At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
Hello, I'm Steve MacLellan, the financial engineer and proud member of IBCanada Group, where we show you how to grow, control, and keep what you build instead of giving away to taxes, fees, and the unknown. And we got a great show here today. So if you're a do-it-yourself investor or even have questions about investing and the infinite banking concept, we're going to talk about the benefits. Yes, as advisors, we're actually going to talk about the benefits of doing it yourself investing and how infinite banking can complement your actions and get you to that next level. Because one of the things I feel is the infinite banking concept can really allow you to swing for the fences on some of the other investments. Hayden, would you agree with that concept, that the infinite banking concept, because you're having money that's never going to go down, it's vested, it's getting that compound growth, it allows you to either do it yourself invest or go for those bigger home runs?
Yeah, for sure. I think there's more comfort when you know that you have a good safety net. And so once you have that safety net, you can kind of take possibly more riskier investments that have a higher return. How we live our life, there's so much information out in the world. And so it's easier now than it is before to do the DIY investing, just because there's so much information out that's free. And so people just research what they want to research, and then they feel comfortable enough to make those decisions on their own rather than using an advisor. But you'll know in the back of your mind, like, if this doesn't work out, I still have a safety net that still recaptured a lot of the money that I put into it. And so I think that's gives the person a peace of mind, knowing that whatever happens with this, if I make money, great. If it doesn't work out, then I still have the IBC policy, still creating guaranteed growth every day.
In a lot of what we do with technology and just the way society is going, a lot of times we try to do everything ourselves. And, those that do work with financial professionals, I would say a good advisor is going to help you make money, but a great advisor is going to help you not lose money. But still, a lot of people want to do things on their own. Scott, can you dive deeper?
I've been doing this since 1994. So I've gone through the Russian default, the Asian currency crisis, the tech bubble, the '08 financial crisis, even 1994 when interest rates spiked in like a 2-month period, they were up 3% on a mortgage. And all of those, if you look back, when the market declines, it can be looked at as one of two things. One, an opportunity, or two, a problem. It is only an opportunity if you have access to capital. If all of your money is in the market because that is where you're chasing the returns to make for your retirement pool, then it becomes a problem. And what I love about infinite banking is that it gives us that safe warehouse of wealth that allows us to earn compounded money while our money sits there, waiting for an opportunity to present itself. So we can have some money in the market, and when the market declines, that money is going to go down. But if we have access to capital with no questions asked, complete liquidity, and we control the whole banking process, then we have the ability to now not chase the market for the returns, but wait for the market to provide the opportunity to us.
Well said. So even, going back to Warren Buffett, who is a huge fan of the infinite banking concept and follows this, it's one of the reasons why he's so successful, is you should be selling when other people are buying and buying when other people are selling. But so few do that. Scott, you being in the industry for so long, why is that so? Why? We know better. We all know what to do or what we should be doing. Why aren't we doing it? And when I say we, I mean the 90% of Canadians out there.
So there's two parts to Warren Buffett: buy and hold, but then it's sell when everybody is buying and buy when everybody is selling. And we have to realize that if we do a buy and hold mentality, then when the market goes down, we have nothing else to do but just tighten the seatbelt and hold on and wait for who knows how many years for it to go back up to where it was. But there's the fallacy. If I had $100,000 and it went down to 70, and then it goes back up to $100,000 and it's 3 years later, one, I'm just back to where I was 3 years ago. That $100,000 has now been eroded by inflation, so it's not worth as much. And from the financial plan perspective, I was targeting a 6% rate of return. So those 3 years later, I should be at least $18,000 to $20,000 further ahead. So I've now just lost opportunity costs. It's great that I got back to even, but I'm 3 years delayed. So now if I had my money in a safe place and it went down by 20%, I could allocate money towards that, reduce my overall cost, and enhance my returns.
Say you got this down. You bought something, you got a good value, you're seeing there's some returns on it. What would you tell your client who wants to capture some of those returns that they made? How would you help them get involved in the infinite banking concept?
So when people make a profit, it is really difficult for them to sever what is making money for them. They would rather sell off what's losing and continue buying what's going up because they believe that's going to always be the case. So to get people to take money out and put it in infinite banking, they have to understand the problem. The more money that they're making outside of a tax-sheltered vehicle, the more money they're going to pay in tax on that amount of money. They're essentially growing the harvest. So it's important for them to understand that if I can now take this money off the table, essentially house winnings, off the table and shelter it somewhere where I can never lose money on it. Now that becomes a much easier conversation for people to have going, I'm really not taking it out of circulation. I am just sheltering it someplace safe for the next opportunity. Because if I'd made this much money already on these investments, it's not likely to continue on forever. So going back to Warren Buffett then, I should start selling when everybody else wants to start buying.
Yeah, there's lots to be said that you almost need a psychology degree to go over kind of what you mentioned about the psychology of money and being able to sell when things are up. It's sounds easy to do, but very few do it. If you could read, so Glenn, we've been just talking about those that do their own investing or those that have seen some recent profits, some gains. How the infinite banking concept complements do-it-yourself investors. Is there anything that you'd like to add on top of your head, how IBC can actually complement those that do their own investing?
Sure. Just to add to what Scott just said there, it is difficult for people to see that when things are going up and up, to see that this ride will not continue forever, right? And one of the worst things is when a combination of pullbacks and access is needed at the same time, because now you lock in whatever losses there have been. So if you've got an alternative vehicle that is not exposed to that, and another important thing Scott said, the money in there stays tax sheltered, right? Because for most vehicles that are going to keep going up, you're going to have taxes that people aren't thinking about. So if you can have an alternative place that is very predictable in that you'll never have a negative day, you always have access. When these pullbacks do happen, and you probably see opportunities or maybe you need for some sort of coverage, you've already got money someplace that you can take it rather than locking in those losses, so to speak.
And on that for a second, usually when the market declines, so we're not talking about an individual investment here, we're talking about the market in general. Knowing the market declines, it's either before or during a recession. So now, during a recession, jobs become scarce. People get laid off. At the same time, their capital has just gone down. It becomes a double whammy if they need access to money and they're pulling out of their investments at a time when those investments have gone down. They are now compounding that loss. So having control of the banking process and having your money in a completely safe vehicle allows you, one, to weather those storms, but two, also be able to take advantage of those opportunities.
And unfortunately, just the way things work is when things are handy, everything's going gravy and your investment's up. Do you generally need the money? A lot of times, no, right? But when things are down and, the economy's down, all these drivers, guess what happens? Those are generally the times that you need the money. There's a strain. And unfortunately, do you think the banks are out there to help you? No, they're not going to help you. When banks are like that friend that are always around for good times, but when you need a help, your deck to be built, they're nowhere's to be found, right? And the same thing happens a lot of times with your investments. That's what makes the infinite banking concept so powerful. It never goes down and it's there whenever you need it. And it has those positives that we talked about where you have control. There's low fees attached to it. Another beautiful thing, it's very tax shelter. And we talked, maybe it's not as emotional and maybe not as fun as do-it-yourself and investing. You're not screaming at the TV and high-fiving, but it has that opportunity to make life that much more fun and that much more interesting because you're not worried about your investments going down.
I'd almost disagree on the emotional part. When there's blood in the streets and people are panicking and you have certainty and you can take advantage of opportunities, I feel like a little bit of a lottery winner at that time, right? So definitely got some, not only are you more balanced emotionally because you're not panicking as much, you're looking with different eyes. Others are going, oh my God, what do I do? How long is this going to continue? And you're looking going, where are the opportunities that I've now made myself very prepared for? Where are those opportunities? Let me pick through. And that is a little bit euphoric to me, right? So yeah, the emotional part of that comes in as well, then, right?
Well, that's just it. That's a great point there, Glenn. I just started watching Man in the Arena. It's a documentary on Tom Brady. Phenomenal if you have a chance to watch it. But that's one of the things is his claim to fame. Instead of worrying about everything that's going on in the media and what the sport broadcasters are saying, what the other team is saying, he's just laser focused on what needs to get done. He has those structures and systems in place. And that's something the Infinite Banking Group does as well. Glenn, I know we were a little running to an end here, but is there anything you would like to add about the infinite banking concept and maybe how it can diversify your portfolio?
I think we don't stress enough the words of the concept becoming your own banker. Just having access to cash that grows steadily, that keeps you ahead of inflation, right? That you can pull the trigger on when to access, when to pay back. That I don't think is really taken into consideration enough. That becoming your own, you're in total control for when these opportunities come up, right? There's emergencies as well, but isn't it much better to be able to access something that doesn't have any pressure of payment, any wondering, will I qualify for this? Will I be able to get it if there's an emergency? And of course, you feel much better when you're taking advantage of an opportunity, but it doesn't really preclude how and why you need it. It's just knowing that it's there, right? And that gives just great peace of mind, great confidence in how you operate and start moving in the world, because you know you've always got this access. And that for me, like I said, is such a huge part of things. And that's what I try to give to my clients more. A lot of times, we get caught up in the what's this rate, what's that rate? It's like, no, what's the value of having cash ready for you when you need it? What's the value of it?
Awesome stuff. So Hayden, what advice would you give to potential clients or your clients that you have that say, I want to do my own investing? What would you say to them today?
Young people like myself, we haven't really gone through so-called recession or kind of big crash in the market, and how inflation's at this point at what it is. So a lot of young people aren't sure or aware of what could come and what's looking like it will come. I would suggest having a policy and just keeping your money there, because even for over past 100 years, insurance companies have paid out dividends every year. So that's including all recessions, all market crashes. And so when you have that data of over 100 years, it kind of gives you a sense of relief. Okay, I can kind of trust this financial tool. And if I have leftover money, put it in to a policy, and then you just kind of ride the wave and then wait for those opportunities, like Glenn has said.
Awesome. Scott, same question. You've got a client, he's got the big bucks. He says, I want to go into the market. What advice are you giving them?
It's funny because I actually had the situation a week and a half ago where I had a client meeting, infinite banking client, who was requesting, begging me to take over his investment portfolio. He wanted everything to be done in-house. And because of the freedom that I had of no longer looking at assets under management as the only, source of revenue for myself, I literally just told him, listen, just go to a discount brokerage, save your money. You don't need to pay me. We can have a discussion about what investments to go into, and go and just buy the lowest cost options available to you. And now, when you want to make a purchase or make a sale or make a change, you get to do it yourself when you want to do it, instead of firing off a phone call or an email to your advisor. And then a day, 2 days, 3 days later, you finally get a hold of them. And then the paperwork has to get done. And then the trade happens another 2 or 3 days after that. A whole week could have gone by. Whereas with the do-it-yourselfers, they have that flexibility. If they want to make a decision, they can pull the trigger right then.
I think there's a lot to be said about about having the control. And generally that's, if that was ever to come to me, first of all, I'd ask the client is, are you more interested in growing or protecting what you've got? And of course, if they want to swing some for them, those big home runs and hit some, never would I ever tell them to invest everything that they got into that home run. I'm going to bring up the infinite banking concept. Listen, you can protect the portion of your income here, your money. It still grows. It's tax efficient. It's always going to be there. And then, put a small portion of that, swing for the fences.
What I'm loving is that we can have better rounded conversations with them and say, hey, you want to do this? You can do this, but you don't have to put everything over there and risk it. Here is your starting point. Here is your security blanket. Here is what you can count on. Oh yeah, go do what you want to try. And if it works out well, you can do more. And if it doesn't, then you didn't risk everything. So I love that they can have the option to not say, well, I got to do either or either. I can do both. And have the security and the knowledge that what you put over here is going to be here, and it won't be less than from one day to the next. It'll just continue to grow. And then you have the flexibility to go take some chances if you like to.
Awesome. Listen, I know we could continue this conversation, and we probably will in the future, because there's so much to this. There's the psychology, there's the ability. A lot of people will just put their money in the bank account and do nothing. But listen, I think people that have done that, they've seen huge loss here in the last year just due to inflation. People don't take that into account. Doing nothing a lot of times is straight loss. The investments, yeah, they can go up, but they can go down too. But you have that stability and that growth with the infinite banking concept. If this tweaks some interest, all we ask for you is to share this with someone, give a good thumbs up, leave a comment, and contact a local infinite banking professional. You can simply go to the website IBCanadagroup.ca.com, works there as well. Ton of information. There's a masterclass and a lot of way for you to rethink your thinking and help you grow, control, and keep what you build instead of giving away to taxes, fees, and we mentioned loss today.
IBCanada Group, your independent authority for information on the infinite banking concept.